Hey guys, happy Friday night. Thank you so much for being here. Uh-oh, here comes Jackson. Jackson wants to come over and see who in the heck I'm talking to. Come here, Jackson. Come here, let me see you. I got a treat. Come here. Let me see you. Come here, right here. Jackson. Come here. Come here. Jackson, hang on a second. Come here. Okay, I'm sorry about that, guys. Thank you so much. I should have thought about that before. Hey, Bond's here. Yeah, no, it's late. I'll tell you what. I've been. This is going to be a quick update. I didn't do an after. I didn't do a after market close report, and I've been working, and I've. You can't see it on your end, I realize, but I've totally reorganized my desk. So this is kind of a test run of my new setup. I have a. It's a long story. Anyway, but I was just going to catch up on the stuff we didn't look at the end of the day and see what was going on. But yes, it is nearly midnight for me. It's 11:21. What time is it where you're at? That probably means most likely probably 12:15 where you're at. Anyway, all right. Well, Bitcoin's looks like it's not really moving. I guess there's we're gonna check out Weekend Wall Street as well really quick. I wanted to see how the Divas finished up. It was a pretty good day. Oh, that's not too bad, Bond. Okay, cool. Well, no, you're just getting started, man. You're just getting started. Yeah, and whenever I do these late shows, I used to do a show called Late Night with Max and Jax like 2 years ago when I first started. I know sometimes I still say I do one, but I used to have a thumbnail and do a special thing a long time ago. Well, anyway, it's basically the same thing as what I do now. But I brought it back. But anyway, yeah, everything was on fire. I just wanted to kind of take a look at everything. I really haven't got a chance to just kind of look at stuff. So anyway, Weekend Wall Street is absolutely totally flat. So anyway, okay, so let's not worry about that. Let's not worry about this. I do want to look at stock index futures, see how they finished up. Well, that's not what I wanted to look at. This is. I mean, it just looks like their futures are just grinding it out at 69.51. Right? Anyway. I mean, that's the center of gravity there for futures. And boy, on this, look, this is just reverting to mean. They talk about a mean reverting market. This is just a classic right there. Jackson, everything all right, buddy? Jackson threw up earlier tonight. He wasn't feeling well, and he didn't eat any junk. I don't know what's the matter with him. All right, so Bond's saying silver's on fire again. Absolutely right. It's the only thing holding my silver and gold are holding my darn portfolio up because I'm so stubborn and I have to buy. And I'm stubborn and I'm a big believer in blocks, and other funds that aren't doing that well lately. But man, thank gosh I'm in silver and gold also. Well, anyway. Yeah, that's incredible. That is absolutely incredible. Okay, so let's talk about. Let's see. What was it? I thought I had something serious I want to talk about. I just kind of wanted to test out everything and make sure the camera worked in the new position. And I think this is actually perfect. I think this is good and perfect. You know how I haven't been in Discord a lot lately, and I apologize. It's a long story, but anyway, I think I'm going to be in Discord from now. I'll be back in Discord next week, just like I used to be. See, I have a bunch of stuff fixed. All right, so Let's look though at the ones I wanted to look. You know how I'm of a one-track mind, and well, actually, that's the one thing I want to talk about. A couple things. One thing we can talk about the max factor. And we'll talk about the max factor in a second, but let's talk about the diversified divas. Let's just kind of look at the. Let's look at the diversified divas. Okay, man, Chippy, why didn't I just put all my money in Chippy? My whole retirement, everything. At the first of last year in Chippy and Soxy. My gosh, look at this thing's a monster. I mean, even the Spies up 1%. It's been a bad last quarter. The Santa rally did not happen because this is from October 31st. So it's all of November and all of December. So it's not the last quarter, it's the last 2 months. And it's the last 2 months of the last quarter. Well, but it's the last 2 months, plus it's the first 23 days of this one. So this is about a quarter right here. I mean, when you have a quarter that goes by where, Spies flat, that doesn't happen often. Qs are down, Spies flat. That's going to be a tough case for any of these funds. Let's see what, let's see. I did want to look at the max factor tonight also. That's the other thing is I didn't have time to make a daily factor show, but that's what I was going to do. We're just going to have a kind of a at-large daily factor. We'll just look at the list, and if you guys want me to look at one of your funds, put it on there, and and we can check out your fund. But we're going to kind of have a random dividendchannel.com, right? Well, anyway, I don't know what's going on with that. Bitcoin had a lot to do with some of the death throes, yeah. Yeah, I hear you. Okay, so let's check out. Something's burning. All right, diversified divas. Back to the divas. So, back to the divas. Rough quarter. I was going to say Q, SPY down. So it's a rough comparison. What I was trying to check out really quick is triple QI even up? Just that's a nice benchmark, But if the Qs aren't even up, it doesn't. It's going to be the rare fund. These things aren't designed to beat the market. I guess we can answer that question when we look at I guess let's look at the max factor. I guess that's the whole reason we have the max factor. So guess what? Here's the new max factor, and we have a new number one, GDXY. Now you guys have to promise to still watch the top 20 show tomorrow, but it looks like that's it. It's GDX. Well, it's GDXY. But I'm sorting by the no BS factor here. I wonder if that's also the same. In any event, it's doing well, but so's K Gold, Silvo, GOOW. That's killing it also. Based on Google, went from 64 to 73 on NAV alone, and is paying about a 42% annual yield. Carboni, IAUI, Goldeye, Fiat, XOMO, Y Gold, Goop. Boy, out of the top 10, there, you have Y Gold, Goldeye, IAUI, Silvo, K Gold. How is K Silv? I think K Silv is too young to be in here yet. It may not really be, but I don't think it's on the list, or it would for sure be on here. But anyway, yeah. So you guys have to be sure to watch the top 20 show tomorrow. But here's kind of a rundown of it. Okay, but back to the issue at hand. Okay, so it's been a flat quarter. The max factor measures the past quarter. That price minus 90 is what the max factor the short-term max factor. The long-term max factor looks at the yearly price and some other stuff, and also looks at volatility. But so so to answer my question, let's see what the best Q-based fund for the quarter was, because we have them all right here. We have them lined up. So let's just, sorry, I don't have a graphic made, but let's just go down and pick it out. DOGG, Dogs of the Dow Fund, GGT, IDEVO, XYLD, that's, okay, QYLD. Actually, the best Q-based fund for the quarter, and I find this hard to believe, is QYLD. Is the NAV went, but the NAV went from 1742 to 1777. I don't think it's as good, but anyway, but let's just compare it to like TDAC. So, but anyway, there are a few Q-based funds that were up on the quarter. Now, the diversified diva spreadsheet isn't exactly 90 days, and this is 90 days right here, so that may be the difference. It doesn't mean these are way better than any of the divas, but you have TDAC was up what, 50 cents, what, 54 cents on the quarter, and paid a 15% yield. You had QYLD that was up 30 cents and paid an 11% yield. Now let's see where triple QI is, because that's a really good one. You had JetQ that was up a little bit on the quarter and paid a 10% yield. You had XCLM, which even without factoring in the rights offering, was up a penny on the quarter. What are you saying here? God, my eyesight is going. My glasses are, my sister, my brother's the freaking glasses guy. He's the eye doctor. You think I could get some glasses, but they're on backward. There's something they had to order, some new something. Anyway, so, but I can't see worth the darn. So anyway, GDXW, yes. GDXW, absolutely. It may not be on here for whatever reason. If you're asking why the heck isn't on there, because it should darn sure be ahead of any of the other ones, I would agree with you. It may be too young, but we could darn sure look into that. If it's not on here, it needs to be on here. What about TDAC? Yeah, good call. And we found TDAC. I should have read your. I need to get better at reading those comments in real time. Hey, we got what's going on here? Copper and platinum income funds will start to become popular. Heck yeah. Heck yeah. So I got that income stacked and I used the Bitcoin stack. Well, I'm sorry. I meant I'll start it. I'm saying opposite. I got the stocks and gold. Anyway, the stocks and gold stack. But I have plenty of exposure to Bitcoin. I have BITK. I have blocks. So anyway, I think I have good exposure to Bitcoin. Yeah, Cursos come out of copper. Well, I can't wait. Okay, so but there are some. But to answer our question, so just they aren't divas, but there's some funds that aren't necessarily divas like TDAC and even QILD that are up on the quarter. So and even the index isn't. The index on right here is not up on the quarter. Look, there's the Qs down 1%. Like I say, this isn't exactly a quarter. This is about 5-7 days, about a week and a half short of a quarter. So but in any event, back down with the divas. So then we have QLDY. I mean, that thing, I can't speak highly enough about that. That's a lightning spread fund. That's what the Q lightning spread, QLDY. It's lightning spreads on the entire index. So it's uncapped upside. It does a little bit worse than the index on the downside. It does not have a buffer. It has a little bit negative buffer. And you can see when the market sold off really big in October, it was down 8% and the market was down 7%. So that's your risk right there. You lose money at a faster rate than the market. So it's less safe than the Qs or the SPYs. So you know so be cautious with it. But on the upside, it should get about the same upside as the market, which is really exciting because that's never been a thing before. I cannot tell you how excited I am about that. All right, what do we got here? Is that old Taz there? Let me see. Are you Taz from Baltimore? Are you Jeff? Is that Jeff? Anyway, if it's Jeff, welcome. If it's not Jeff, Taz Somerville, you're a first-time commenter. Thank you. In either event, thank you for being here and coming. Bikerman. Yeah, I'm really liking the new setup. I mainly had this just to test the new setup. But yeah, this is really good. This is really good. I just need to get my new glasses and I can get some work done here, I think. Okay. Hey, Jeff, thank you so much for being here. I haven't seen you around that much lately, maybe. I don't know. Yeah, I'm all about Curve Platinum. Old Mark from Discord is getting, he bought I think he was posting he was either bought it or was going to buy it. Just a platinum fund. It wasn't an income fund. It was just a platinum fund. I think it was like, I don't know, PTEM or it's something real basic. I was like, what the hell's that? I Googled it. It's a platinum fund. Anyway, all right. Government shutting down, set everything back, but should be back on track. Shut everything down. The government shut down the SEC filing process, but yeah, hopefully it should be back on track. Well, what is slowing down Alti's ability to come back? ULTI's ability. I mean, this thing is still down. You want to talk about a quarter? I mean, you know, there has to be in any index or any subset, there has to be a safest one and a riskiest one. Well, ULTI is just the riskiest one in the subset of what I'm calling divas, but you know, the diversified hedge fund style funds. I just don't think there's any excuse me. I still think there's any doubt. ULTI is just, you know, the way it's built is just on the risky side. It can sure move up fast too. Now blocks is not, you know, blocks isn't exactly, look at blocks, you know, the market was down the Qs. So that's, you know, was down 5%. This thing in blocks is down 27%. It's getting 5 times convexity on the market, or 5 times whatever. Not really, you know, it's a 5x anyway. But can it go up 5 times as fast? Probably not. That was just a really bad month. It's just because of Bitcoin going down. But in any event, if Bitcoin goes back to all-time highs, blocks would be on my block. Blocks would be looking good. Blocks would be back in positive territory, I would think, if Bitcoin goes back to all-time highs. You know, blocks tracks Bitcoin the most carefully. But then we have both of these blue ones down here, and that's, okay, LFGY, or actually we'll put the next 3 kind of together because they're right there, the next kind of subset. Well, this blocks, it's okay. The next little subset of risky on the risk is blocks, ULTI, LFGY, and WPay. I mean, that's your next little, those aren't super safe either, but those can all go up really fast in a hurry too and have before. Everyone remembers ULTY went on a tear last summer. And WPay is capable of going up fast. So is LFGY, just not lately. And blocks, of course. I mean, you guys have seen blocks do it. It's just not this quarter in any event, though. But that's the next little group on risk. And then the kind of the safest in the group, I would say, are on the safer side, would be, yeah, GPTY, kind of, it's more blue chippy. And then we have K-Yield. K-yield definitely belongs. Look at K-yield. It's tracking almost with the indexes, a little bit behind. And to be fair, it was way behind when the market was dropping. It dropped like 3x what the market did. So it's, it's not exactly innocent. It's made a nice comeback, but it's kind of on the least risky side. So that's the divas. I keep saying I need to, but we have two new divas. Meanwhile is definitely a diva. And Mago's not a diva. Mago's an understudy, but Meanwhile is a diva. So here is the Meanwhile positions. So I have their starting positions the other day: AST, Coinbase, CrowdStrike, EOS, and now AST, Coinbase, CrowdStrike, EOS. Looks about the same. Okay, so but they brought some money to the table. There's more size. Like on this EOSC trade, they did have on 22, or they still have on 22. I don't know. Anyway, all right. These are interesting trades. I don't know if you guys have looked at these trades yet. These are four-leg, not collars. Collars wrong word. Just a four-leg lightning spread. So it's a long call and short put that goes out like 3 months, and you can see that right there. There's the short put, and there's the long call, and that goes out the long call goes to April 17th. Yeah, there's the short put. All right, so they're, and that's the 115. Now that's probably right at the money on AST. So that's the same thing as having the stock, except you don't get the dividend. However, the dividend is priced. The amount of the dividend is priced into the options, and it whatever. But you don't get a dividend check. So that gives you exposure to the stock. Then in addition to that, they can just go out and look at this January 23rd. So that's today. These expired on ASTS. They sold the 105 and they bought the 97 put. So that's just a solid bullish bet that the market goes up. If the market goes down, that's an agreement to buy the market wherever you sell the put. You're long you're long the market at 106, right? Yeah. You're long the market, because if it drops to 105, you got to cover the difference. I mean, yeah. So you're long 106, but then it's like you have a stop loss, but it's better than a stop loss. But you're long 106 and then spread off at 97. So you're long 106 at 106, and a long for 6 plus 3 is 9 points. So you're adding 9 points of risk, whereas just being long the stock gives you 115 points of risk, whatever the stock's trading at. Anyway, so let's look at ASTS. Let's look at that example. Or actually, let's see how these worked out. So I did a couple of these trades in option strat. The Mimi, I'm fascinated by Mimi. Mimi's badass. I mean, I'm not saying it's better than ULTI or K-yield or ULTY or any of them or blocks, but I think it has good elements from some of them. And some elements I don't like so much from some of them. But anyway, we'll let the professionals worry about that. They create, okay, yeah. So Mimi right here. So I did this Coinbase. Now this is down $1,800, but this I just put on the trade the first day it came out. I was hoping I could. No, that's not really going to help us much. The short leg's already expired. Whatever. Okay, so let me show you how to, if you want to do one of these in your own account, or do one. If let's say you want to do one in option strat, it's a long synthetic. They call this long synthetic future, but it's synthetic. It could be stock. It depends on what the ETF's in. So, all right. So which one are we going to do? Okay. We'll do Coinbase, or we'll do ASTS because that's what AS. All right, and they did the 115. Remember. And on these, the thing about these is these have to go out a long time. Yeah, to switch the expiration out there. What was it? April 17th. So you can see right there. That's your profit and loss graph on this option trade. It's not really a trade. It just simulates stock. It just exactly simulates, between now and April 17th, you essentially have you own the stock. So, and then all they're doing, and they're going out every week and they're doing this. They're doing sell put, and I think what they sell the 97 or something. I forget what it was. It was like they sold the 105. It doesn't even matter, but they sell one out of the money and then they buy. We'll do the 100, something like that. So, but the problem is, if you're doing it, you have to watch out because they put it on the same date, and you don't want you want these puts to expire. You gotta be kidding me! I hate when I do that. I hate the way this I hate not having a trackpad. If anyone has an old Apple trackpad, send it to me. That goes with the desktop, even if it's 20 years old. Gosh. Anyway, I was trying to put this together. I think you guys saw what I was trying to do. You guys may not even be that interested in this. I'll talk about whatever you guys want to. You want to look at the max factor, and but you guys could see where I was going. You set up a synthetic, and then they sell options every week against the synthetic. The synthetic exactly simulates stock. Stock goes up 20%. In theory, the synthetic ought to be up 20%, and since they're selling put spreads, stock goes up 20%. Put spreads are expiring, worthless. They should have all the upside of the stock and be able to pay the yield. Now when the market goes down, they're going to have all the downside of the stock plus a little bit because the lightning spread has a negative buffer. As long as you're all right with that and understand that there's a little bit of extra risk in a big down market, because usually they put the options out of the money. So a little down market, it's not a big deal. But in like a washout down market, you're going to have a little extra loss with the lightning spread funds. So, okay, what are you guys talking about here? But, okay, you're in Somerville. Well, I'm glad you're okay. Somerville, South Carolina, Baltimore. Heck yeah. Used to be in Baltimore. Now you're in South. I think South Carolina. South Carolina looks like a cool place. I've never been, but I bet I'd like it. I bet I'd like it. Columbia, somewhere, college town over there. Clemson, somewhere. I bet I would like it. Anyway, K-Silv is outperforming silver. Is that not amazing? That's crazy. So let's see if dividend. The real thing I wanted to check before I forget, and this is what I want to check the whole time. Triple QI against what do we want to test it against? It was triple QI. I wanted to test it against something in the max factors. I forget what we were. Oh, yeah. I know exactly what I want to test against. The Q is the hint against QLDY. I mean, triple QI has been the blue chip NASDAQ based forever. And it may continue to be so. No other reason, because it only pays 12, 14%. And the paying the small amount is just such a key. But if QLDY is as revolutionary as I think it could be, I wonder if it could maybe replace, because man, I'm telling you that, guys, this QLDY is something special. But I mean, but let's just look side by side. QLDY's, I mean, QLDY's NAV went from 50 to 46. I mean, that's that's not good over a third of a year. But I mean, but I mean, so it's down what, $4, but it paid $6.50 worth of dividends. So of course it's yeah, and right here it's on by this measure they're underperforming. They're a little bit behind triple QI. Triple QI is a monster. Triple QI is 4.8 and QLDY is 4.1. You can see though the difference though, because they both started out $50.54. So the price is roughly it's close enough to be the same that you can see the difference is one pays $3 and one pays $6. It's the dividend. If you subtract the dividend out and you look at the difference in the NAV, triple QI's NAV is actually only down $1, where QLDY's NAV is down $4, but QLDY pays $3 more in dividend than it's and because you look at total return and they're both up 4%. It's just moving money around. It's just, that's why we say it just depends. Don't use these unless you need income, and if you do need income, that's fine. But don't overuse these. Just And well, let's do this. Let's look at triple QI compared to, which is a beast. I mean, triple QI is a beast, and so is QLDY. Don't sleep on QLDY. QLDY will pass triple QI in an extended rally because it's not capped, in my opinion. Yeah, this is awesome. I got it now where I can keep Discord open at the same time. I got a better setup here. I'm hoping anyway. And that way, if somebody's trying to message me on Discord, I have that here. So, anyway, all these are good funds. I mean, triple QI is a good fund. QLDY is a good fund. The main thing is Qs are good. As long as tech is good, of course, any of these derivative funds are good. Yeah, Qs are. It's been a good year. We'll see if Qs are good next year. Anyway, yes. Now ULTI has been doing better lately. They added gold, silver to capture. Yeah, they also blue chipified it a little bit. They turned it more like into GPTY. And GPTY, people sleep on that one. That one, GPTY beats all the ones that people think are so good. It did last time I checked. Anyway, GPTY does really well, and no one ever talks about it. That's fine. People hate Yield Max, but GPTY is a monster. Look at GPTY beating TDAC. And not just by a little bit. It was just spanking the heck out of it. I mean, anyway, GPTY is a monster. So I think what they did is but it's just because it has a lot of blue chip tech. It was a good year for blue chip tech. So what I thought they did is they GPTified it a little bit, putting stuff like that in there. And then they also, then they put the non-correlated stuff in there. Did they copy off Howard, or did Howard copy off them? Howard Chan, when he came out with K-Yield, that was his strategy from the get-go. The guys with Alti kind of happened on that strategy because they were tired of getting their asses kicked on social media probably. And they're like, we got to stop the bleed. I would guess, because, you know, people were unhappy and they're trying to make people happy. So I think adding the blue chips and adding the gold and silver, and it's not only gold and silver, they also added bonds, and they started throwing in some sneaky inversely correlated stuff. And I think it's been good, but still though, you can throw in all the inversely correlated stuff you want to, and the next time the market drops like it did in, you know, mid-October, the next time the market drops 10%, that thing's going to drop, and they're all going to drop. I mean, the next time the market drops, but maybe not as much as ULTI. So far, like I say, ULTI and blocks are kind of in a field of their own as far as risk. Now we'll get it. You know, it doesn't look particularly safe by just the looks of the option build. There's no meme Y has no. Let's go back to meme Y. I'm going to swerve back over into the meme Y line. Does anyone want to talk about? Do you guys care about meme Y? Does anyone have meme Y? I haven't. No, Taz. I haven't covered the Defiance funds being nixed. You know, I don't really mess with leverage ones that much. The furthest leverage I ever got was WPay, and I sold it. So anyway, yeah, Alti is doing a little better. You're finally agreeing on K yield, but I saw some people criticizing K yield on X or something. I mean, I think K yield's a pretty fantastic looking fund. I mean, they were saying, well, you know, it's down 5% or something. I mean, but anyway, they just don't. You know, I look at everything. You have to look at K yield compared to other alternative investments, and other alternative investments in that same class were down a lot more than 5%, and I don't think they were factoring that in. But anyway, TSYY is below $5. Split incoming. I don't know. I'm not sure. Doesn't seem like they should be that close. You think ULTY is over distributing? I hear you, Bond. I've been doing a lot of research. Gold and silver mine stocks to add growth, just skyrocketing. Yeah, I mean, I think the thing that's important to see about this, with all the transparency, being able to watch these guys trade in real time, and I really don't do a great job at it, but guys like ETF Inspector, you know, evaluate every trade, and a lot of you guys have your own spreadsheets, and will evaluate, you know, what they're doing and the different strategies and stuff. Here's the lesson. I mean, you know, yeah, add non-correlated assets to your own portfolio, and I think a lot of us have, and maybe a lot of us already knew that, but we just look at what a difference it's made in just a short time frame with ULTY. Or look at this. Look, people like, you know, K yield. People like K yield so much. It's a good looking fund, but that's basically what they've done. It takes a lot of risk too. K yield's not a safe fund, but they throw in a lot of non-correlation to dampen the volatility to the extent they can. So I think that's kind of Howard's niche in life is, you know, and it's the lower volatility. It's the lower volatility niche. How about okay? What about old KQQQ? That thing's, I haven't checked into that one on a while. I don't know if that's really diva status, but that one's technically probably should be a diva. But look, that's been out exactly a year or whatever. In this back test, it just pulled up exactly a year. So what are the odds of that? But look at this. I mean, GPTY beats KQQQ. I mean, now granted though, it lost $8 in NAV, you know, where KQQQ, you know, was flat on NAV, but you only got like $3 in divvies on KQQQ, where you got 15 on GPTY. You know, so you could take the 15 you got on GPTY, replace the $8 of NAV, and then you put $7 in your pocket, and you're better off with GPTY than you are with KQQQ. And that you can also that shows in the total return. Anyway, great job. GPTY. All right, but back to Mimi. I want to swerve over in the Mimi lane. Yeah, I agree with what you're saying, Z Bikerman. I'm trying to keep up with you guys. What did you do? Oh, you must have bought KQQQ at the top. I buy everything at the top because I'm just treading water. Well, yeah, I'm sorry. Okay, so let's look at these. So look at this: ASTS, Coinbase, CrowdStrike, EOSC. What's EOSC? Is that energy? FCX. What's FCX? FCX is, what is FCX? Anyway, Robinhood. It looks like a lot of Bitcoin stuff. They have Coinbase, Robinhood. Okay, Coinbase, Robinhood, IONQ, IREN. I mean, is that not a super Bitcoin heavy fund? I mean, they have Lunar. I mean, okay, MP, that's some rare earth material processing. That's kind of not along the same lines. They have some energy stuff, but it's AI related energy with SMR. SanDisk, Tempest AI, Teradyne. This looks very similar to the stocks that are in. To me, it looks kind of similar to the stocks that are in ULTI and some of the stocks that are in K-Yield. Right? K-Yield has some of these stocks, a lot of these. Anyway, so these guys all have a different take on it. So, I mean, it's that they have the same stocks, but these guys have a better option strategy, I think. I think that, I'm trying to think, out of all of these, this one has uncapped upside. I'm trying to think, and Blocks has uncapped upside, but it's focused in Bitcoin. So if Bitcoin doesn't go up, you're screwed in Blocks. Okay? We don't have a general one with uncapped upside. We kind of have FIAX. And then we have GX. But we don't have a meme-based one. But then we kind of have that has unlimited upside or uncapped upside. But then we got Mago. But Mago's not really, it has to be the Magnificent Seven. To be a different stock, they would have to file for a change. I mean, probably a prospectus, whatever. So, it's not really a diva, but this one is full because they can throw stocks in and out, and they're free to do all kinds of different strategies. I bet they do this strategy. I mean, this is a good looking little strategy. Look on materials processing. They use the 165 call and put for the synthetic, but then they sell the 164 and then buy the 161. So they're essentially long material processing at 65. They're long material processing at 65, and they're also long another. So they're long 500 shares because it's 5 contracts. But then they're also long another. They're long 5 puts that are at the 64 level. So the market's at 65, so 64 is 1 strike out of the money. Let's see what material processing looks like. Oh, and I know I was going to say, but through the put contract. Okay, so here's what I was going to say. On MP, they're long the stock at 65, essentially, because they bought a call, sold a put at 65. That's long the stock. But then they're also long the stock again. When you sell the put, you're long the stock. You've agreed to buy the stock at the price of the sold put, and they sold 5 puts at 64. So you're long the stock, or you've agreed to get long the stock at 64, but you've also agreed to sell it at 61. It's like a stop loss, but even better. in my opinion. It's a built-in structural stop loss. So what I'm saying is, in this position, you're long the stock, essentially. And then you're long the stock again, and you're long 500 shares of the stock. And then you're long 500 shares of the stock. However, only 3 points, because you've agreed to buy the stock at 64, but you can sell it at 61. So you're long the stock. So that's basically leverage. You have the and that little 3 points you're biting off. You do that every week. They do that every week to generate income. They sell that little put spread underneath behind the market. You hope the market goes up, and you keep writing put spreads behind it. It's a genius strategy. Look on Palantir. On Palantir, they're long the market at 170. Okay, but then they're also long the market again, potentially at 160, with the ability to sell it at 152.5. So they bid off another 7.5 points. So they're long Palantir, and then they're long another 7.5 points. So the other 7.5 points, I've told these guys to do these. I told David Nicholas, I said, this is like cheating. It's like leverage, but they don't have to tell people they have leverage. But essentially they do. They're doubling down. They're doubling down, which is awesome. Yeah, Penelope, I love curves. I love curves funds. My favorite curve fund is K-Yield. Let's look at K-Yield versus yeah, but I'm liking the new setup a lot. I didn't get anything done this week because every time I said it, I came in here, nothing worked, and I can't get used to it anyway. But I think I finally getting the workflow down. All right, yeah, K-Yield and we were just talking about K-Yield and K-Triple-Q. Look at these things. They finished at about the same place, but they took a vastly different path getting there. You know, and K-Yield's definitely a diva, because only a D. Because I mean, you know, it lost 17%, or yeah, it lost 16% in a couple of weeks. You know, but K-Triple-Q, on the other hand, over the same period of time, lost about half as much. K-Triple-Q takes on a lot less risk, about half as much risk, I would say, just looking at it. And guess what else? Guess what? The yield's a good proxy for risk. The yield is also about half on K-Triple-Q versus K-Yield, or less, about a third. What is it, like 12, 9, 10, 12, 14%? Let's just look right here. So it's been what is that? It's been a fourth of a year, and it's paid, what is that, 82 cents? So that's $1.64, and so that's 320, 330. So that's paying at a rate of about 12%. That's pretty good. I mean, paying 12%, but K-Yield is paying, you know, I mean, K-Yield paid $1.82. So was that 360, 720, 722? It's about 30%. So, you know, so K-Yield is paying about 2.5 times as much, and it has about 2.5 times as much risk, which makes total sense. I mean, you know, they're good. It just depends on what, in a bullish market, K-Yield's going to leave K-Triple-Q in the dust, I would think. We'll see, though. We'll see. Oh, yeah, it is a good time. Hey, you definitely hit like and subscribe. It's also a good time for me to remind you guys, not financial content, I'm not a financial consultant. Please can check with your own professional consultant who can give you licensed advice. If you'd like to support the channel, you can always go to paypal.me/maxconvexity. But yeah, and also don't forget, hit like and subscribe. Well, Marcus, what are you doing here? You need to go to bed, dude. Marcus probably got up to pee and saw that I was on live streaming. You know, that's whenever I get on a retire on dividends, because he gets on like at 4 o'clock in the morning my time, or it's 6 o'clock in the morning his time. So I guess it's 5 o'clock in the morning my time. It's not that early, but the only time I watch him is I get up and pee and I can't fall back asleep. No, I like his show. I'm not saying anything bad about his show, but then I'm up. So I'm thinking Marcus may have got up to pee. Anyway, sorry it's too late for you. You didn't miss anything. I'm just testing I'm just testing the equipment and shooting the breeze. Yeah, and I am a night owl. I am a night owl, and I always have been. But yeah, I have so many. So I have a list of videos to make, but I've had a bunch of hang-ups with my with everything. But I finally got all the adapters here. I need, other than a freaking trackpad. I need a freaking trackpad. Let's go. Let's go see how much. You guys see that? Yeah, I mean those magic ones, they're like $200. But anyway, but I just need like an old generation one, like there. But even that one's pre-owned, $80. But yeah, that's what I need, man. I'm so used to. I cannot get the workflow down of a desktop. I've used laptops, MacBook Pros for years. I've never touched a non-MacBook since like 2015 in until about until about 6 months or a year ago, and then I started using Windows. But I'm so glad I'm back in the Mac ecosystem. But I'm not a desktop guy yet. But if as soon as I get the Magic Trackpad, maybe they have a Magic Trackpad 1. And it doesn't have to be. It doesn't even have to be Magic. $165. Apple stuff is so expensive. I mean, look at this one right there. Magic Trackpad, wireless, multi-touch, click. That's what I need right there. That's what I need right there. Anyway, okay. So what else you guys want to talk about? We can talk about other stuff. I just wanted to see what was up. You guys want to look at the Max Factor anymore? I mean, I always like to look. I hate how all these ones that are single stocks or based on gold are number one. I mean, that's fine, but the top diversified one. Look at Marnie in the Max Factor. I mean, but you know it. NAV return this quarter is 25% positive. Yield is 18%. You know, just you could put a no BS on that. You multiply 25 times 18, and you get 5%, and you get like actually that is actually number one on the no BS. It's not risk adjusted. The no BS isn't risk adjusted. It doesn't care about risk. Don't you know? But it just on if you just on the numbers. I mean, heck yeah, we'll take that any day of the week. 18% yield and NAV up 25%. Heck yes. You know, because at that point the yield's like free money, and if you're dripping, it's compounding at progress. You guys get the idea. The math on that is wonderful. But anyway, okay. But back to the diversified ones. SPIN, SP index. There we go. And I cannot believe out of all these high power funds, like SPY, how did SPIN beat SPY? I just don't get that. Well, let's look at SPIN. So SPIN, but here it is. The NAV went from 30, because the thing is the Max Factor really prioritizes safety. You know, it prioritizes stability amongst above everything else, because you have a stable NAV, or even a NAV that's growing a little bit, it's making the dividend like free money. So anyway, but this thing, the only problem with this is it only pays an 8% dividend. So it's from State Street. It's based on the S&P. I bet it uses monthly options. Super steady, but heck, the steady route's working out. So let's look at the next highest diversified S&P based. It's Devo S&P based? I mean, Devo's NAV is up 11%, but I think that has some international stuff. Anyway, let's look at the next domestic one. So XYLD, right there. That's S&P based, 10% yield, and this one's NAV is up also, but not up as much as SPIN. But I mean, it's still up, and that there's something to be said for that. Okay, then the next diversified one is QYLD, NAV up 2%, paying a good yield. Next diversified one is IWMI. That's a good one. That's our first one from NEOS. NAV's up slightly, but it's up. making that yield pretty much free money. Then we have SPUT. That's a put right fund. I forget who does that one. Pays a tiny yield, but you'd expect the NAV to be up, and the NAV was up. Then we have TDAC. I mean, you know, TDAC doesn't do as well as some of these other ones. It's probably because it has a little bit more. If you look at the stable decks, it's on the riskier side. TDAC. I mean, they use daily options, and they aren't covered at night, which gives them more upside, but it also gives them a little bit more risk, or more beta, whatever, or alpha. Anyway, JEPI is a diversified one. RSPA is a diversified one. This one's NAV is up. Really, if we just wanted to sort it by NAV being up, K Gold's number 1, Murney's number 2, Y Gold, just sorted by NAV, not factoring in anything else other than just NAV return. Y Gold's number 4, GDXY is number 5, Fiat. I mean, why is Fiat doing so? It's sad for Coinbase that Fiat's doing so well, right? In my opinion, it is. It's good for people that have Fiat to hedge their Coinbase position. Sign of the times, whatever. Silvo, GGN. Oh gosh, this is one of those darn freaking closed-end funds. You got to be kidding. I'm just joking. I like closed-end funds just fine. I just like to joke the guys in Discord about them. Anything that makes money, money's money, risk-adjusted returns, all we care. Look at SCHD kind of got on here on the NAV return. Is SCHD really up 7% this quarter? You got to be kidding me. I thought SCHD sucked. I mean, people have been saying it sucks for years. It does only pay a tiny yield. So you'd expect the NAV needs to be up 7% every quarter if they aren't going to pay any yield to you, right? Anyway, but yeah, we can look at by NAV return. I don't think that's the best way to look at it. Let's just line it up by volatility. Let's see what's the most volatile. MST, that's probably one of the ones that got delisted, right? That's that double leverage from what's that from? Defiance, right? Look at this. Price went from 27 to 16. It's down 72% this quarter. SMCC down 70%. MSTW down 60%. That's the reason I'm not making any money in WPay is because of MSTW. You freaking dog. MSTW. HOW was a darling for a while. Look at that. It's bled off 43%. Yeah, these are the riskiest ones, and we know. I mean, no one would think these are safe. I mean, Morrow, Misty. I mean, Blocks. I mean, Blocks is the 17th most risky one, and I think that's fair. I think that just mathematically, this is just based on math. Now let's sort it by long-term max factor. Let's actually sort it by the Quandex, which is long-term max factor. All right, Quandex. Who do you think's number 1 on the Quandex? It's 111% Quandex. It's Y Gold. Wow. Misty. Okay, MST isn't. Okay. Well, I wasn't sure about that bond because I saw some people that were griping about that, and I couldn't understand what they were griping about. They were saying, oh, I guess it's about AUM because it's not about protecting the customer. It's about or something because that's the one, MST is the one that has some AUM behind it, right? Where all those other ones didn't take. I don't know. I saw some snarky stuff on X, and I wasn't sure if I was reading too much into the snark, but I knew you guys would know. So yeah, thanks for telling me. Bikerman, what are you talking about? What HYUC? What? That sounds like some of that BS closed-end fund stuff. Come on. We don't do none of that BS closed-end fund stuff. HYMC. We'll take a look at it. I'm just so glad everything's working and I feel comfortable in my office for a while. You know, that one does look pretty good. Alan. So not a closed-end fund. That's actually a stock. But heck yeah. Heck yeah. Jiminy criminy. What about this MP that people always, yeah, that a lot of these funds have this MP. Look at this bullish breakaway gap and never came back and tested. It hasn't yet. Even did a second gap 2 days afterwards that wasn't tested for a while, but then recently got tested and there was buyers there a couple of times. Those open gaps are great places to buy the dip, in my opinion. Or they can be there, and if they don't hold, that that can tell you something. That gives you a clue on something else. Okay, but yeah, good call on that one. BKR, I don't put anything in that has more than 4. Now HL, I'll put in HL because if it has 2, ones that have 2 are usually good. Yeah, Hecla Mining. Okay, yeah. Oh yeah. But I don't put in anything with more than 4 because that's when you get to the BS. I'm just joking. I'll put them in if you insist. But dude, it's just gonna make me sick. I'm sure there are ones that are up fucking. Oh, I'm sorry. I'm sure there are ones that are up freaking 14,000% or something. Gosh, I wish I had software. I wish AI could go back and delete that. I know there's AI that if you say clip that, it'll clip that. In fact, now since I said clip it, it's going to clip that. But I wish it would go back and take that out in real time. Anyway, sorry, my apologies for cussing. I promised somebody I wouldn't cuss last Christmas, a viewer, and this year, and that was last Christmas, not this. And I stuck with it for about 6 months. I let a couple of them slip. Anyway, snowstorms bring crypto gains. Yeah. I like snowstorms. I'm glad MST. I mean, I'm glad they're being deleted. What about ET? The one I was kind of curious about in there was the double leverage plus income, but they didn't have an index yet. I was excited for them to, of course, you know me, I'm obsessed with indexes. The closest they had to an index was Ethereum. They have an ETTY, I think, which was double leverage. But I think that was probably one of the ones that got cut. And that's fine. The world's probably not ready for double leverage. The thing is, you're asking, I always say these things, it's asking options to do too much when you do more than 2 things. You know, that 2 things is the limit. You could try to do 3 things where but anyway, options are priced efficiently and you're just trading money with yourself, I think, when you try to do 3 things. I think you can choose 2 things. You could say, okay, I want an income and I want protected downside. So you could do a collar, you know. But there's some people that, want, say you want an income and you want totally protected downside. There's probably no money in it. Or it's hard to make money. You have to be willing to take a little bit of, you have to let the market, you have to be willing to take a little bit of risk, get a little bit of reward. All right, you heard the binds. Okay, liquidating. Okay, so Penelope, it's because their companies are covering. Yeah, that's the issue of defiance. Well, yeah, no, that's another issue as well. But I don't think the companies see it that way, Penelope. I think they shut down probably because there wasn't enough assets under management coming in to make the funds worthwhile for running. That's kind of what I think from a cynical standpoint. But yeah, no, absolutely. I hear you on that, Penelope. Yeah, no, absolutely. We're on the same page, Penelope. I should look, to GL. I know that, or HL, whatever, Hecla Mining. I knew what you meant. No, I know. We should all look to that. I mean, do they have my question is, do they have options? One, but I mean, back when I'm never going to buy a single stock. I mean, the closest I could do is I guess I did essentially have this. I should beat myself up. I mean, because I had one of my largest positions was in GDXY, although that really didn't do that good. But I sold it in October. I sold it right here. It did well for me. I bought it. Seemed like it did better than that. Is that all it did? anyway, it had a good total return though, but I took that and I bought that here and I took that and sold it here. So I made a little bit. Plus it was on drip. So and then I sold. So I got free shares and sold them. I rolled that into this, and I got that right here, I think, because right the same day I sold the other one, right in a little bit early. I could have waited and got a better price, but I didn't. But well, I'm really happy with K Gold, and then at the same time, of course, K Silv. And I didn't have any silver before. Before, my whole precious metal allocation was GDXY. I really thought GDXY had done better than that, but oh well. But they did do. I mean, they did better than some of my other things. Probably the best investment of the year for me, and I sold it was, well, I mean, it was GPTY. I bought it like in April and sold it in October, late October, somewhere in here. That was a good one. That was definitely a good one. Pretty much anything I bought when after the dip, I bought GPTY, I bought LFGY, I bought ULTY, I bought LFGY. Probably did best of all in ones. Well, that one lost, but I did so well on that. I sold all of that in October. So it just, I mean, yeah, I did. I mean, I sold all of it, or maybe I think I did a rebalance in September, whatever. But I'm glad I got out of that. Glad I got out of that. It did well while it did well. I should have got out this last summer though. That looks kind of similar to Alti to me, ULTI, which also used to track Bitcoin more, or still probably going to track, in the sense that it went up, bottom at the same time, everything did, but it also topped at the same time. And people forget, but it was trading at about like $5.30, $5.20, $5.40, somewhere in there for 2 or 3 days in April. It wasn't like it just touched it and went straight up. And I mean, no one got that price, 54. And then within April, within a month, then just over a month, it was trading at $63. And it's not like no one got that price. And it traded, or $6.30. And it continued to trade at $6.20, $6.30 all summer. All right. Well, anyway, I sold some of this in October. Should have sold all of it, shouldn't I? No, well. But I did sell. I sold that in October, and I actually had a profit in it, believe it or not. I mean, when you include the dividends, I was actually up 20%. I mean, that's but anyway. All right, Penelope. What do I think of closed-end? What do I think of closed-end funds? You should. Well, I think about closed-end funds is, are you in our Discord? We talk about closed-end funds all the time in our Discord. I'm actually not closed. You aren't. Okay. Well, if you want to join, I don't know. I don't have the link handy right now. But anyway, Marcus, are you still up? Join us. Marcus it's not Marcus. We actually have BR and SB, or it's not SB, it's BR. It's BR, and there's a couple of other guys in here too. I guess no one's in here because they would be chiming in. We have some guys in the room that study them all the time and have some spreadsheets and follow them just almost as much as I follow the option-based funds. But anyway, I guess they aren't in here right now. But not a closed-end fund. Okay. I got you. I got you. Oh, of the CEF fund. Okay. Okay. I'm sorry. My bad. My bad. My bad. I like closed. Anyway, I don't have a problem with closed-end funds. Okay. I got you. It's not a closed-end fund. This is an ETF by coincidence that's named CEF. That's the greatest thing ever. Okay. No. Yeah. That's, I like it, but I mean, I don't know that I'd put new money into it. I just don't know enough about it. I mean, my theory on gold and silver is it's just what I learned a long time ago that you ought to have 5 or 10% in your account, uh, you know, small amount in your account for inflation protection and black swan stuff. That's what I learned from the time that, in the 80s and 90s, back when I used to manage money professionally. Well, but lately it's been kind of the hot trade to have gold in because it's a trade. But I think even when it's no longer a trade, I think 5 to 10%. So I follow the same theory with my high yield. My high yield account I treat separate from my growth account. So my high yield account, what I call the model portfolio, yes, I do think what was it? On my account, I think it's the same thing. I think you should have, in an income account too. It's not only that it's the hot trade. So I think I have about 15% in gold and silver, between K gold and K silver. When I sold GDXY, and I sold GPTY and I sold ULTY, a third of ULTY, and all of LFGY to raise money. And what I did with that money is I bought K gold, and I bought K silver, and I bought K yield, which I think was a KYLD, which was a good investment. And I also bought more blocks, which so far hasn't worked out. But anyway. But anyway, sorry I got confused on the CEF. Anyway, I was just going to say there's people in here that on closing funds, yeah, and there's guys in here that know a lot about it. But yeah, when we were actually talking about CEF the other day, yeah, that's amazing. I mean, it's like anything else. Here's what I would say about that. It's like if you're young, you want something like this. You don't need the yield. The yield just creates a tax problem. You have a job that. So yeah, if you're young, you want something like this. But if you're an older guy, something like this, it's not going to go up as much. Even as great as this looks, it didn't look as good as that last chart, and it's not designed to, because it's paying you, part of the money is paying you back in the form of yield. This is not paying a huge yield. It pay 4.8% over half a year. Well, it's going to pay 12% or something, but that's fine. It's fine because you get all this upside. I mean, that's the way Howard does it. He designs his to be more conservative, it's a good looking chart. Yeah, you got to get that gold. You got to get that gold. All right, so let's see, Sprott Fund. Yeah, you got to get that gold. I hear you. Daltone FM. I like that blocks. I mean, I bought blocks. I mean, I love blocks. ULTY was my favorite fund for a long time, and then a few months ago, blocks took it over, and it's been my favorite one. But then lately, I've been really liking this one. Does anyone have any of this? Now, it doesn't look great there. You can't tell funds by it. I know it's from Defiance, and I know Penelope's not a big Defiance fan. She says they're putting out too many funds, and they are. We're definitely in a bubble for covered call funds. There's way too many. I agree with that, and I love them, but there's enough. They don't need to bring any more out. But the thing is, though, it's kind of cynical. I'm just saying that I'm kind of being cynical. They'll keep bringing them out as long as people keep buying them. There's actually a market for them, probably as people retire, and especially if interest rates come down. I've always said if interest rates go to zero, I think it might hurt the covered call funds. But if interest rates drop 0.5 point, market will still be plenty volatile. Bonds will be less attractive, and these will be even, that's probably what will happen. The short end of the interest rates will drop at the short end. Market will still be volatile. Everything will be fine. Anyway, yeah, that's Sprott. They're the people. They know all about they're specialists in gold and silver, aren't they? So what do you have there? You have all SPPP. Yeah, I mean, Platinum and Palladium Trust. You don't have an income, but I mean, you don't need an income if it goes up like that. That's a great growth play right there. Yeah, I like blocks. I like blocks a lot. I wouldn't be surprised if Meme-Y, at some point, Meme-Y becomes my favorite. I'm really liking what I've seen of Meme-Y. We'll have to see how much they pay and how quick they recover, their NAV and just different things and how they behave in different kinds of markets. JT says he likes QLDY, but you hope it goes back to the 48.50 price. Yeah, it will, as long as the market goes up. It just needs the market to go up, and I mean, it needs the market to go up long enough for it to go, I mean, anyway, because so it'll happen. It just hasn't happened yet. It should. I mean, I don't know. I mean, unless when the market drops, if the market drops 20% from here, it may. I mean, this QLDY will drop 20%, so it'll drop from wherever it's at now. Say it's at 45, it'll drop to 35. So I mean, it's no guarantees on life, but if it'll follow the market. And a lot of these won't. A lot of these just follow the market down, but not up. And that's what's so interesting about QLDY and blocks and some of these other ones, because they follow and or beat the market up. Bond has a little QLDY in, but you're not adding more. Okay. Yeah. May not be the best. It's because remember, yeah, it's a bullish bet on the market. If you don't like the NASDAQ, sell all your QLDY. I'm not saying that I like QLDY as an investment, but I'm saying if you want NASDAQ exposure in a covered call fund, I think that's one of the better ones you can have. But I mean, there's other ones out there too, TDAC. There's lots of good ones out there. And okay, Penelope's clarifying. She does like Defiance. I was just kind of joking. It just disappeared. No explanations why it never. Oh my gosh, I've never heard about that. Really? I'm sorry about that. I bought there in my portfolio. Then so months later, it just disappeared. I'm sorry. Bond has triple QI. It's been a good one for Defiance, surprisingly, since I was actually triple people. One of my best friends, in real life, it's one thing to tell people on the internet about something, and then it's a bad, people hate it, and they say, no, that stock sucks. But you have a friend in real life you see every week, and a year ago, and you tell them, what do you like? I like ULTY. A year ago, it's the best one out there. Last December, I mean, in my opinion, for me, it had the best thing I was looking for because of the protected downside and the high yield and stuff. A lot of new stuff's come out. It's not that way anymore. But I said I like ULTY and I like triple QI, and because he was just looking for something steady, and he's been putting money into it, dripping it. He's up. He's happy with both of them, and he's going to start withdrawing money for making a car payment with it, withdrawing part of that, But anyway, yeah. So he's been real happy with it. And triple QI is not flashy. It's not flashy. And the thing with triple QI, that was a year ago. If he'd asked me the same thing now, I would say, well, I told him the other day, I said, yeah, ULTY is not the best anymore. I said, you need to get something called blocks, BLOX. But anyway, but he said it's been fine for me. He said I'm dripping it. I'm doing fine on it. And triple QI. So anyway, but he doesn't need the money. He's just like set it and forget it, put it away, let it drip. You guys get it. So anyway, yeah, but I was comparing triple QI to something today, and it compared favorably to something. It beat something that you wouldn't think it maybe should. I forget what it was, but it's funny. Funny you should talk about it. Now look at that, boy. K triple Q just smokes it. Smokes it. To be fair, I mean, I always have to be fair. Triple QI will do better in a down market, and we have evidence of it. It dropped 10% right here. In the same time, this thing dropped from 11 to 9. This thing dropped 2011. This thing dropped 20%. K triple Q is probably twice as risky, but I mean, it's paying off on the upside too. So, but I'm not knocking K triple Q is a good fund. K triple Q is a good fund. This is based on a year and a half. All right. All right. So JT, what do I think of GX? That one now, yeah. You know me, I'm pretty much to the point. I'm not going to, I pretty much am trying to get all the funds and all the stuff in my model portfolio to have uncapped upside. So GX is on my list. It's one that I would consider now. I mean, as you guys know, I have blocks and I have K yield. K yield isn't really technically uncapped upside, but Howard does a different strategy. Howard does a different strategy. He doesn't mechanically cap every time. Sometimes he uncaps, so Howard's fine. So K yield's not a cap. So I'm trying to switch to ones that are uncapped. So the next one on my list is Meme Y. I need to get Meme Y. What did I buy yesterday? I bought something yesterday. Oh, I bought Mago yesterday. I bought Mago and I bought the income stack product. But anyway, the next one I need is Meme Y. I'm just going to wait. I still thought maybe something was going to happen overseas this weekend. I thought maybe I could get a cheaper price on Meme Y next week. But Meme Y is on my list. I really want to have all uncapped upside high yield ETFs. The problem with that is the uncapped upside ETFs, the way they get that uncapped upside is by giving up a little extra downside with those lightning spreads. All of them use some variation of a similar strategy. You guys, we've seen it happen in real time. I love blocks, but you guys saw how fast it lost money in October and November. It's just kind of the way it goes with that fund. Well, so if I'm having a whole portfolio of blocks type funds, I need some protection. So I'm doing something different now. I'm going 30% in inverse and tail risk in things like, or I got some ATTR today, which is a tail risk fund. I was going to get Chaos, but ATTR owns Chaos. And anyways, so I have 30% in inverse and tail risk. So in a really bad market, because my high yield model portfolio, which is like, it's going to do terrible. It's going to get murdered. It's going to get extra downside. So to deal with that, I don't want 100% in the high yield. If I had 100% in the uncapped upside high yield, it would be too much risk for me. The market would drop 10%. In my high yield portfolio, it'd be down 40%. But if I put 2/3 of it in these high yield ones with uncapped upsides and Alti, I still like Alt Y. I like what it's doing all right, but I've been selling a little piece of it here and there as they bring better ones out. And I think it's down to like 9% of my account. It was like 29% at the height or something, because I bought the dip with it. That's why I did well with ULTY. I bought more at a lower price and then sold it higher. I did well on that tranche of it, but the latest tranche I'm not doing that great on, but whatever. But what I'm saying is with blocks and ULTY and I have K yield in there, and I have QLDY, and I have Mago, and I have the income stack one. I never can remember the ticker, and I'm going to have Meme Y. That's a ton of risk. I mean, but that'll be like 65% of the portfolio, or essentially is. Another 35% will be tail risk. And then if we get a risk off event, like, gosh forbid, that 30%, it won't make my, it should just hopefully make it where, hopefully it will dampen the fall, because these things are volatile, and these things that are paying 50 and 60 and 70%, when the market drops and they're paying that out, and then they aren't recovering any NAV, I mean, they're just getting murdered. So I have to have something to offset that. I hope 30% in the inverses and the tail risk is enough. But anyway, but with all these, I may need to go 50-50 or something. I'd go, it doesn't matter to me. I mean, I just want to, I know I think there's a ratio out there where I'll get the upside that I want to get the income that I want without taking any undue risk. So anyway, triple QI, triple QI, that's the way I say it. That's the way I say it, Daltone. You have triple QI and then you have triple QI, because sometimes I used to talk about Defiance all the time. That's when I used to do that all the time, triple QY and triple QI. You'll hear me now say Alt I and Alt Y. But people still say some people still say that's hard to hear. So sometimes I'll say Alt I from Rex, or Alt, Y from Yieldmax. All right, Penelope likes GX. It's very diverse. Yeah, I agree. GX is good. Triple QI. What do you think about replacing QLDY with TSYX? Okay, so you're okay. Well, Eric, all right. Well, I mean, I hadn't thought about that. QLDY. With TSYX. Just darn, I just remembered I forgot to, it's not a big deal, but I forgot to click the monetization. I mean, there's 29 people here. I'm actually doing well. Okay, I'm going to go over and click that really quick. That's actually a pretty big crowd for me. This is my biggest crowd in a while. Thank you guys so much for being here. All right, so I don't know about this one. It looks, I mean, there's not enough data. Well, what the heck? What's he trying to do to me here? So which one's new? TSYX, is it really that new? Okay, let's look here. Let's look here. TSYX. Oh yeah, okay. It's the tap alpha lifted. I'm sorry. Okay. Well, I mean, it depends. I mean, it might be pretty. It should be. You know what? The lightning spread is synthetic leverage. They don't have to say it's leverage. I don't think the reason that's why they're doing it. I think it's a legit good strategy to test well, but it's levered. But it's just a little bit of leverage, because it's just levered between the two strikes. You're double long between the two put strikes. This thing right here is essentially the same thing, because they're 130% long. Well, 100% is like being long one time. 30% long could be like being long in a put spread. That, I mean, it'd be like a pretty big spread, but I mean, it's the same theory. They're doing it with math. They're doing it by buying extra synthetics. They're doing it by over leveraging. I guess they're using it with leverage, but the lightning spread idea, I mean, this is daily, the lightning spread. It should be interesting. I'm going to say this, just eyeballing it. I think the lightning spread is levered to like 110% or something. So I think that this would probably do better in a bull market. Because the lightning spread, because this is levered 130 and it's a daily performance. Remember, WPay is levered at 120 on weekly performance. This is 30% daily. This has a lot more leverage than WPay did. And a lot of you guys have been unhappy with WPay, or not really with WPay, but unhappy with some of the W funds that have gone down because the extra 20-30% really makes a difference in the down market. Yeah, I don't know. That's going to be a close call. I'm going to stick with Q. I think I'm going to stick with QLDY, but I mean, I don't have a problem with Tap Alpha. I mean, I could easily, if QLDY is not cutting the mustard, I would consider the one I might really even be more tempted. Maybe I don't know. Probably not. I'd probably get Tap Alpha, but I might also be interested in the Neos boosted ones. But I would probably go with Tap Alpha because of Matthew Tuttle and Sai Katara. Sai's been on the show a couple times. It's just been about a year. I need to get him on again. But big news, Matthew Tuttle is going to be on next Friday. I talked to him today. We talked on email. So Tuttle is the guy from Tuttle Capital. And I'm telling you, I think Meanwhile, I'm not just saying it because he's coming on the show. I think Meanwhile is maybe has the best mix of strategy and factors right now in the high risk category. But I mean, but K Yield's really good too. I mean, I think Meanwhile is going to be, I don't know. Well, we'll see. We'll see. Here's what I hope. Here's my hope for Meanwhile. Here's my projection. I hope Meanwhile's like, well, I was going to say, I hope it's like Alt Y for Max, Alti, but with uncapped upside. Alti's only problem is the cap on the upside, in my opinion. I love how Alti doesn't drop that fast in big down markets, but the cap on the upside, kills the recovery. So what I'm hoping for is it can own stocks like Alti, but have unlimited upside. But the problem, it's not a problem, but the thing to be honest about, though, is that's probably not realistic, that I want it to be like Alti with unlimited upside, because there's no protection in these. These positions have full 100%, a little bit more than 100%, have like 110% downside. So when I project it and I say I want it to be like Alti with uncapped upside, that's not realistic because Alti doesn't drop very fast. This Mimi will probably drop pretty fast and go up pretty fast. Mimi will probably be more like blocks and ULTI, to be honest. But we'll see. I mean, we'll see how they do. It ought to be fun. It ought to be fun. Yes, Mimi is definitely weekly, right? Anyway, right? I'm sorry, Max. Actual compare. Yeah, you're right. Eric, I noticed that too when I was talking about it, but I just went with it. But we'll put it up there. But yeah, so Mimi is weekly for sure. Sai has been everywhere promoting these. Okay, well that's good. Well, but I didn't. I'm not trying to. I'm not that into the. I mean, these are great or whatever, but I'm more into the stuff Tuttle's doing. Tuttle is the sub-advisor on TDAX and TDAC. So that's why I know I kind of switched lanes and talking about Sai. I'd love to have Sai on too, but yeah, Tuttle was, but I can't. I want to get Tuttle on the show to talk about. I really want to get him on the show and find out why is Oh No not coming out. I would have got. I bought a bunch of ATTR today, and I would have probably bought Oh No. I mean, I hadn't seen it yet, but it hadn't been ready. It hadn't been out yet. I mean, I really thought war would break out, and I still think it might, and I still think it'll probably send a shock into the market a couple of days. And maybe then hopefully the market will rally after that. Maybe I'm totally wrong. But anyway, but yes, Eric, back to what you're saying. Let's correct that. And yeah, we got to be right here. TDAQ. Okay, TDAQ wins. Now it's a third of a year, and okay, well, one started at 25, one started at 50. This is easy. Let's make this apples to apples comparison. Okay, we're going to double the price of TDAC and double everything and see how we would, which one we would rather have. Okay, so you say, okay, well, TDAC's ahead. I'd rather have TDAC. Okay, I get it. Rather have TDAC. Okay, let's do apples to apples on it. So we double everything on TDAC. So TDAC, you made $3 in divvies, and the NAV was up. So that's good. Your NAV actually was up 13 cents. We're going to call that flat. Basically on TDAC, you made $3 in divvies. The reason I said 3 instead of $1.50 is because we're having to double it to make the dollars, to make the comparison work. So we don't have to do percentages, right? So $3 is what you made on TDAC. On QLDY, you made $6.41. Okay, you say, oh, Max, but the NAV lost. Okay, well, the NAV's down $4. I mean, anyway, whatever. You guys can see. So it's what it always comes back to. If you need income, maybe QLDY could work because it's, and you need more income than TDAC puts off because QLDY puts off about twice the income. But if you don't need income, yeah, take TDAC. You like to quantify, me too, but we don't have a lot of. So on quantify, yes, I like it. But what kind of index do I use for BTGD, which is Bitcoin Gold, right? Sorry about that. BTGD, and then gold. I mean, because Bitcoin, because that's Bitcoin and gold together. I mean, but yeah, it's been. I mean, yeah, those are amazing. I don't even. I try to stick with stuff I understand, and the covered calls and the callers and stuff. I understand what they're doing and stuff. This hedge fund rebalancing stuff, even though it's on what BTGD's doing. They're doing that with futures, and they're doing stuff that Zed guy was on, and the stuff he was talking about is stuff above my pay grade. I'm trying to learn about it and stuff, but they're using futures and doing some kind of rebalance all the time. There's a way the traders will use 2 different futures contracts. One that expires this week and one that expires next month, and they trade them against each other. And they can extract time decay out of them somehow. I don't get how they do it exactly. Like with options, I understand it exactly to the T. Well, anyway, but so I think they do that kind of with this beat. So, but the thing with this, so they own Bitcoin futures, from what I can tell, and they own gold futures, but they rebalance them in such a way to make it optimum for total return. But then in the ones that are going to be income, they rebalance it in such a way to make it optimum for total return, but also to leave a little income left over. So I can't wait to see how the income component, because we know without income how it's going to work. I mean, this is without this, because BTGD didn't have to pay income out to anyone. So of course the price doubled. If this would have been an income fund and they would have paid $20 and they would have had $20 worth of dividends, which it easily can happen. Something like that probably would have easily paid $20 or $30 in dividends. And that was it happens every time. Then all of a sudden, the NAV is this, the starting price is 20 and the current price is 40, and it's split once because it went down to 5, because that happens when they pay out. The ones that pay out triple digits, that's why they're going to split the most, because it comes out of the NAV. Now something like this one could support a big payout, you could see the payout. If this one would have been paying a yield, this one could have paid. This one could have easily paid $10, and it only cost 20 initially. So it could easily pay 50%. It could easily pay 50% and still have positive NAV. NAV wouldn't go from 20 to 40, it'd go from 20 to 30 just because of math, but you'd be getting the other 10 in your, in the form of dividends. But yeah, but I can't wait to see how they do, and I can't wait to see how they do. Yeah, Lay's is incredible. Lay's is insane. Lay's is just insane. It's just these are just directional bets, though. They don't have any income component, which, on the other hand, though, Lay's is paying pretty good dividends, though. BTGD paid a little dividend. I mean, I guess it paid, hang on here. Sometimes the ones that use leverage and stuff can pay a dividend, a small dividend through that rebalancing. They can make a little money somehow. I just don't really understand it. It's hedge fund tricks. Yeah, I mean, look at Lay's. So Lay's paid $5. Yeah, Lay's paid pretty good. Okay, so here's the thing, though. Is this regular dividend? Some of these ones that use leverage will pay a dividend at the end of the year. Like Maxi used to do that. Yeah, and because they get a little something at the end of the year. Sometimes their capital gain they need to take or whatever. So yeah, so Lay's is 100%. 100% NVIDIA, 100% AMD. Man, you are long GPUs at that point, right? Look at, yeah, no, Lay's was a good one to look at. Now, I'm really hopeful for all these. I'm really hopeful for Quantify. I'm really hopeful for Mimi. Be there next Friday for with Matthew. I think it's 2:30, and I think that's my time. So I think it's 3:30. No, it's 2:30. It's 2:30 Eastern. Yeah, 2:30 Eastern. So 1:30 my time, and I'm going to have him on for about an hour. You guys can feel free to be on the show and put questions in. He'll see the questions and answer them, or I might see him and ask him. But I'm going to have some option questions to ask him. But after that, I'll turn it loose to you guys. My first question I'm going to ask him is why did the only way he could have done this one better, meme-wise, is if he would have somehow protected the downside a little bit. But anyway, I'll talk to him about that. All right, guys. Well, I've kept you guys here long enough. There's 30 of you guys, which is awesome. Gosh darn it. I hate how I've done this, though. Hang on here. But now that I have the studio working better, I'll be back I'll be back Saturday night. We'll have a Saturday night daily factor, and we'll do probably S&P Saturday. So I just, okay, perfect. Perfect. All right, guys. Thank you so much for being here. I appreciate it. Remember, not financial advice. Check anything you hear on the internet or from me or from anybody else with a licensed financial planner. If you'd like to donate the channel, help me get that trackpad that I need to get, you can always donate at paypal.me/Max Convexity. Outside of that, I will talk to you guys tomorrow. Be looking for the top. I'll record a top 20 show in the morning. Be looking for the top 20 Max Factor show. You guys saw the results, so don't tell anyone the GDXY is number one. All right, I don't want to spoil it. All right, guys, thank you so much, and you guys have a wonderful evening. Good night.